First of all, there is a broad consensus that private health insurance as a funding mechanism is preferential to, or is superior to out-of-pocket spending. Out-of-pocket spending, which especially in the poorest countries is the most inequitable and the most inefficient way of financing healthcare. For insurance to fulfill its expected contribution, however, we need a proper regulatory framework. Regulatory framework that is able to deal with long-standing issues such as adverse selection and moral hazard. But if these prerequisites are in place, insurance is said to be a very important element of a multi-pillar health funding scheme for emerging markets. So against this backdrop, policymakers in emerging markets should think about how to harness private health insurance to facilitate their country's transition to pre-funded healthcare schemes, to more efficient, more equitable schemes compared to the current out-of-pocket situation. There are 5 major cost drivers. Number 1 is demographics. As people age, their health tends to deteriorate and they rely more on healthcare services. And this is particularly relevant for the final few months of human life, so-called time to death, where end-of-life morbidity can take a very severe toll also financially. The second aspect is income. As income levels increase, the demand for healthcare services increases. This is a well-established empirical picture, and the demand for healthcare increases at an even faster pace than underlying levels of income. And this is exactly what we are currently seeing in emerging markets, where tens of millions of people are entering the middle class. The third driver is technology, which is an ambiguous factor, because technology on the one hand is pushing up costs because it enables new treatments or enables the extension of existing treatments. On the other hand, technology can help provide healthcare services in a more cost-efficient way. So the balance is uncertain, the net effect is uncertain. The fourth factor has to do with productivity. The healthcare sector is very labor-intensive. The nature of services is personalized, so it is very difficult to reap productivity gains in healthcare. At the same time, wages in healthcare tend to increase at the same pace as in other sectors of the economy, and this differential, this productivity differential, translates into above average cost pressure in the health sector. And last but not least, number 5 is public policy. There are, for example, different provider payment systems, different subsidy schemes for drugs and other items. So all these are deliberate policy decisions which influence and more often than not drive and fuel healthcare expenditure growth.